welcome back to Tape Reading Concepts. Today I'll explain the rationale for a few opportunities I took in the second half of the week in crude oil. Since I missed the first half of the week because of data problems, I was looking into the Thursday market to get involved with one of the most dynamic futures markets right now, the energy market or crude oil. Walking into the Thursday session, looking at the field from the previous day, I realized that the market is already spreading here a $3 correction between the upper 89s all the way down to below 87 bucks. What caught my attention here is how the market formed the bottom on Wednesday, and then it appeared that in the early morning session, when we come to the table around 7 a.m., the market broke that previous low or that door, but it didn't seem like there's robust demand for lower prices. What really formed the premise for me was the repeating pattern at the bottoming formation. The relationship between these two bottoms geometrically is evident, especially in light of the multiple shoulders on the right side of the turn. In this case I have marked about 3 of them. Definitely high lows, definitely suggesting that price might be stabilizing here below 87 bucks and could be moving back into this box from the previous session, since the market confirmed that behavior with a pretty steep move that promptly rotated towards the session's highs. I decided to look for a good discount if it's offered by the market close to one of these micro structures, which is often where the next stair step will form. The market did oblige, came to the bottom, we saw a little bit of demand, and I did leave an order for a retest of the mid-30s. Got picked up, immediate pivot, beautiful movement on the way up. You can see the exact same formation here as the market is forming shoulders on the right side of a meaningful turning point, in this case a higher low on the session just around 10 o'clock. Pretty much no heat taken on this trade. I decided on a conservative exit here towards the top of this box, looking to front run where the market got rejected last time in the 88.30 to 40 realm. Relatively conservative target. I realized that I'm likely leaving money on the table, but conservative exit to open the week in crude. The rationale here is that you can see where the sellers were really trying to take control of this market down the frequency established from the previous highs. There's the initial rejection. This is where the sellers should have won the battle if they were indeed intending to rotate this market back to or potentially even through these bottoms. As the market opens above this frequency, it's likely that it's going to take out the highs of the session and look potentially for new levels. So this situation here could have easily been managed into higher prices closer to $89. Eventually the market turned back around. Unfortunately, you can't grab them all. My attention here was mostly concerned with the equities market or the ES futures, the index that we trade. Same formation here on the right side of a confirmed high low base. The market did form a triple bottom, congregating here and building up another one of these steps at a higher low, suggesting that there's robust demand here for higher prices. And indeed, you can see that by the end of the session, the market managed to cover another almost $2 here in price per barrel in crude, looking to get above the $90 mark, and surprisingly managed to even build another base here before the close in the last couple hours of the session. Overnight during the Far Eastern and European sessions, you can see the same stair-stepping motion going higher, and as I came to the door here around 7 o'clock, I was surprised to see how much further progress the market has made to the upside in what we call thin air, which is unexplored recent price levels, without even a single more material correction. You can see that none of these pullbacks here as the market is forming these boxes is larger than about $500 per contract, or about 50 ticks here on the price ladder. I decided on principle to get long in the next base, fully realizing that it's relatively late in this progression, but my experience with runaway markets is that almost inevitably when you decide that the market has gone too far, it's going to surprise you and it's go further. So I decided to buy the emerging base here. You can see the same shoulders forming here on the right side, the multiple pivots that do come from the horizontal step. Decided to buy here, fully realizing that if the market looks to break the pivot here using my staple 30 tick stop, then it's likely to at the very least lean on the previous base, and who knows, maybe even rotate towards the lows of the session here, found just about 90 bucks per barrel. I was lucky that never happened, and I stayed here even though the market took its sweet time to build up the current base. Initially tried to cascade here on a parabolic curve, but it couldn't really hold on to the new highs above 92.40, and then came back one more time, but the selling fizzled quickly, and you see that the second offensive by the buyers really took the market to higher prices. So clear sailing here. Vertical motion, this is likely where I should have looked to terminate the position. You can see that about 3-1 was offered. The market was stabilizing just below $93, but this is an open auction or clear field in front of price, so I decided to on principle stay long until the market gives me a very good reason to exit. In this case, you can see that we managed to conquer even here $93 per contract for almost a full 4-1, yet we got a significant progression and more than half the profits were gone at this point, but it was only about 11 o'clock, so I decided to see what the market wants to do. The volatility really started to disappear around noon, and we could anticipate that with the next base building, since it's still a higher low, the market is likely to attempt for the upside one more time. But I have a policy, especially for a Friday, it's prudent to close the session in the early afternoon or at the latest by about 2:30, when the volatility dramatically decreases and it seems that the volume and the interest comes out of the crude oil futures. I decided to exit on one of these shoulders closer to the top of this box that was forming here. Again, you can see about a $500 per contract range forming, and as the coil was tightening, I decided to exit close to the top. It seemed like a good decision at the moment. Now, my initial expectation from the morning session for the market to finally break one of these bases and go to the previous one did seem to be materializing here as we got a bit of a correction. However, if we zoom here and look at this a little bit closer, you see that the moment the market runs through the bottom and takes out all the stops, by the way, just around 2:30, came to the backside, and then as it tried to continue to the downside, a solid edge at a higher low formed. This is a situation where we have a relatively clean book, which suggests that most of the longs here, especially the ones that were late to the party here after 10:30, all these positions built up here within the last roughly 4 hours are now out of the market. Yet it seemed momentarily that there's no demand for yet lower prices. So I decided that what's offered here, just about $100 higher than when I entered in the morning on a clean book, suggested that there might be a secondary move to the upside. The market had already completed 2 waves of roughly equal size in the correction, with quite a bit of rotation in the middle. So support here being offered in the middle of the previous base is a relatively common or high probability event. Once I got long and saw that the market managed to recover above the reference point and extend higher, I happened to notice that there's actually a frequency or a sequence of lower highs that is forming here. If you create this frequency here, you'll see that, well, I decided that late in the session, since I was in this trade just about 20 minutes, I decided I might just round over to a single handle here, take my profits safely, these 30 extra ticks, and decided to call it for the week, ending up with a small winner here, just an extra handle, rounding up to $1,000 within the session, and just short of $2,000 for the second half of the week, which is all I managed to achieve in the second half here of the trading this week in crude oil. Still happy with the performance. Very straightforward bottoming formation and a very solid, stable, consistent stair-stepping motion on the way up is one of my most comfortable templates as I'm looking to exploit directional markets. Hopefully these insights are useful to help you improve your own trading in terms of finding solid premises, finding the right areas of interest where you want to position, and of course have logical management. Stay reading concepts. I'll catch you in the next video.